Good morning, good afternoon, and good evening. Whenever you're watching this, welcome to Breaking News so you don't break the bank. Your host, Merrill Chandler, and your guide to the Fundability universe. So today, we got kind of a wide use of updating news. Well, first one that I want to talk about is there's this amazing article where they're talking about humanizing your CX. Now, I love it because CX is shorthand, is tech speak for customer experience. So even in the name of this, notice was humanizing your CX with empathy. So notice it's just kind of juxtaposed. Both of them together are literally like use empathy to humanize your CX. So, but here's what's interesting is more and more folks, and by folks, fintechs and neobanks, as well as some of our traditional banks, the tier 1 and tier 2s, this is the type, I guess the news is that this is the type of training that C-suite and developers are attending in when it comes to the lender, continuing education. It's literally how to use empathy, and empathy, the heart of the CX experience. And so the heart of digital CX. And so we are, they're saying, with all the hours we spend on market research, we rarely get to the point of what are they truly feeling, what is internally going on, and how do we speak to that. Myself, when I was developing out the new program for our collaboration partner program and training program that we're doing, the Credit Myths Exposed program, I literally have 2 full-blown pages of what the client might, when they're sitting there looking at our stuff, what they might be feeling, because why are they even attending or showing up to our website or showing up to the boot camp registration page? And I have believing this solves the problem of, quells the fear that, soothes the pain of, presents the loss of, allows me to be able to see what I'm saying. And we're doing this, and now I read this article that a lender symposium, but that's offered to C-suites, the CEO, CFO, COO, CTO, etc. The C-suites are attending to learn how to build their platforms with empathy. So everybody is on this page, and I just think it's amazing. And I wanted to start out with that. Now, the second thing I wanted to share is a little different. It has to do more with vanity, meaning that right now, wearable banking is moving past. They're actually ditching wallets and tellers and ATMs. They want, so there's this outfit, and there's just one of many. There's an outfit that is called, hang on, Quantic, and QUONTIC, Quantic. And the debit card is a ring. It says your debit card has evolved, and more wearables. So your Apple Watch can do some of this already, but I'll guarantee that Apple Watch's next iteration is going to have even more specificity than just connecting with your wallet on your iPhone. It's going to connect with, it's going to be a standalone device that's going to process your payments, right? And Siri is already being programmed to recognize making deposits, transferring funds, etc. It is a bold new world out there, but it's kind of onyx black, cool as hell. And it's now your pay ring, not a wallet, not a payment gate. It's literally watches, rings, and bracelets are coming up. So watch for that. Fascinating stuff, because we back in the 90s, they still call it this, but back in the 90s, They called it, there was the internet, and then there was the Internet of Things. And it's just when, your kitchen appliances, your refrigerators, garages, a smart home, the lighting turns on, all this stuff. It was called the Internet of Things, connectivity to three-dimensional objects that are all running on Bluetooth or Wi-Fi. Well, now it's our body jewelry is now going to be included in this, in the Internet of Things. So more to come, guys. More to freaking come. All right. So now there was another fascinating article on literally the 50 credit card trends and statistics for banks in 2022. And so the number one trend is, once again, credit cards and CSRs, customer service representatives. Credit cards are working on creating this empathy experience. How can we get our money back? And yet, how can we solve the customer's problem rather than the traditional model that has been for 500 years, where you send out Guido and Luigi to break some legs to get your money back, right? They're working on, I prophesy that there are going to be some, because they don't currently exist, but I do believe that there are going to be some borrower behaviors that are added to either FICO's next iteration or the pool of 150 that we've given all of our boot campers, right? Everybody's who attended the boot camp got the list of 150 that is available to lenders and FICO uses plus or minus 40 of them. So there's going to be an addition. I guarantee there's going to be an addition of more borrower behaviors that are more empathetic, right? That it's going to be more borrower behaviors about how people are feeling, how people are relating to their finances. The fear to open up your checking account can be measured, right? So fascinating stuff. There's 50 of these things, but the very first one is, hey, let's relate to our borrowers. Let's actually find out more and more about these folks. Now, on the financial side of things, this one has also created a little bit of a stir, but Marcus is it's some funny version of a wholly owned subsidiary of Goldman Sachs. Marcus has been known originally as an installment loan. You could buy like a SoFi loan. You apply for it. It's a soft pull. If you want to pull the trigger because you like the terms that they offer you, that's when they do a hard pull, right? And it was called a Marcus loan. But Marcus has become, over the last few years, one of the largest fintech firms because they've been acquiring gobs and gobs and gobs of other fintechs, right? So note to self. So Goldman Sachs current rating, of course, is a tier 2, I think they're positioned as number 8 or 9 in our total list. The top 4 are tier 1s, and down to 40 are tier 2s. And they're like number 9 and climbing because asset base is just one of the metrics that are measured. So this they have the most recent one is called GreenSky, which has 13 million customers, and they offer no fee interest bearing checking accounts. And Marcus wants it to be the primary bank for millions of people. Now, this does 2 things. If someone has an iPhone or a Google phone, then the unbanked can now have access to funds because fintechs are approaching the web bank model way more seriously than the top 40 tier 1 to tier 2 depository institutions. They are still tier 4 FICO, and I've got all my questions in 3 weeks In 3 weeks, I head to FICO World. And so I've got a whole slew of questions that we're going to be asking. But one of the big ones is, how is FICO measuring? How does FICO 10 measure these low value tier 4 unbanked or products that are being offered to the unbanked? So big news there. Goldman Sachs kind of been doing it covertly, and the only reason why I know it is because of the lenders trade rags that I subscribe to. So that's also a very big deal. Now, to counterbalance this, I'm giving the kind of the bad news first. Everybody's trying to grow this thing in a way that makes the biggest possible difference. Okay. But the article lead says banks not delivering the experience that consumers demand. So I started this out saying the lenders are learning how to empathize with their depositors, with their customers, with their borrowers. But right now, there's a massive gap in the customer experience. 51% marketers perceive that so people, when they're taking polls, marketers, when they're taking polls of a client's of a customer, a bank's customer base, the perception is that there's a 51% satisfaction rate. But when they actually call up the respondents and poll them, the actual consumers, when they're talking to a human being about the pain in the ass that banking is, it's a 26% satisfaction rate. That right there, and the gap exists across all the core dimensions. The core dimensions are customer understanding of the offering. What can you do for me? How does it benefit me? So that's 47%. Marketers say that half of your customers know. That's a pathetic number, right? But marketers come back from their polls saying, yeah, half of your customers know what you offer. When in fact, when they call them up and actually do a deeper dive, 23% of the customers actually know what the hell the bank is about, what offerings do they have, how does it work, and how to use their services. Personalization, the polls say 44% feel that there is a significant degree of personalization, where when they get on the phone, it's actually 23% believe that it is a customized experience for me. I feel like a human being when I go to my bank, right? And then privacy, 41%, 24%, and then omnichannel. Now, omnichannel means, is there consistency between calling the 800 number on the back of my card, walking into a branch, or walking into corporate offices, etc., right? ATMs. And it's notorious because there's just gobs and gobs and gobs of mixed messaging and new programs that are released by the C-suite squad don't translate and don't get updated to all the branches in the same order. So I started this out intentionally saying C-suite banking and fintechs are looking to create an empathetic experience, an understanding experience of why that borrower or why that customer is sitting there with them. And this says that they're failing. So this is Merrill Chandler. You're welcome. So I will see you guys next week. And But yeah, there is a lot to be done, and we're playing our part in making sure the borrowers that I empathize with borrowers, with our tribe, of what the borrowing experience is and how to convert it from being ridden with anxiety and confusion and apprehension to becoming a relatively simple, effortless, elegant, and stress-free experience. So All right, guys, for those of funding hackers, come and join us at, we'll do a deep dive on your questions and anything that we've addressed here. But I love you being here, and we'll see you next week. Same Fundable time, same Fundable channel, 3:45 p.m. Tuesday, Mountain Time.